Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective, each time asking ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. You can find me there under the channel L.A. Little. Anytime, any place, anywhere is the idea. So, folks, today markets kind of meandered higher. Dow was up 100. The strength actually was in the listed issues. You had about a 0.5% gain there. Russell eked out a gain, and the NASDAQ index actually were slightly down. Elsewhere, it was very clear. Dollar was up. All the commodities were down. And that pretty much sums it up. Well, I shouldn't say all. The USO actually got a bounce today. A pretty good spike there. And I thought the UNL was actually up today. Maybe it changed at the end of the day. There was a short covering spike here in the oil market. And that, of course, led to some movement in some of the energy-related names. We actually had some earnings come out, too, and got a pretty good spike in those names. As far as, what does it look like? Well, let's take a lay of the landscape here. We've got another breakout that's taking place tonight. That breakout is here. Tomorrow this will show up as a swing point break. It breaks over this high, doesn't have the volume, so it's going to be just like this one. It's going to be a reconfirmation suspect breakout over the highs. Now remember, this had tested back into support, tried to pull back on that 2-bar reversal, failure at the top. Couldn't do it. What does it do? The very next day goes up, test again, closes at new highs. Now, what it did not do is actually close over that high, I believe, 2024.46. We close at 2023.57. So you go back up, you're sitting right at the highs. And how does that happen? Right in front of Draghi and the ECB decision. It's amazing how everything seems to always line up either, on the cusp, either to break down or break out on a major event. And tomorrow that will be the major event. So breakout on the S&P 500. It joins the Dow. It joins the NDX. So there's the Dow is already broken out and extended. The NASDAQ and the NDX, same story. Now, these two actually were down today, but really it's just what you really have going on here, again, is in front of Draghi, you're getting consolidation after this tremendous run to the upside, right? And there's no pullback. Hasn't been a pullback. The most you got was a little consolidation right here, and now you're getting a little consolidation here. Is that the consolidation before this thing spikes again? And as we talked about before, if it is, that was the extent of the pullback. The ABCD structure is, out of this world, and actually very hard to believe. But who knows? 2,200 on the S&Ps is where it projects to if it really were to play out that way. Russell doing the same thing, congesting, consolidating. It's testing this high, it hasn't got over it. If it gets over, folks, it's going right for the top and probably going to try to break it. So you got the same sort of thing happening here. Now the Russell, being the weakest of the group of the indexes, right, is certainly having a bit more struggle than the others. The consolidations, as you can see here, longer, stronger. But so far, it's up, reversal, up, that type of action, and there's nothing negative about that type of action. On a weekly chart, to put it in perspective, the Russell's going to try to get over this high, and if it does, it's just the highs that are sitting at the top. And it's a very different picture than it was just, 2.5 short weeks ago. So that's the indexes. Indexes looking pretty good. Strength still, really nothing negative there. If anything, positive in that the S&Ps actually do a breakout and join the other indexes. If we look at the sectors, you really don't have any weakness here except for in a couple of the stronger ones. For example, the IBB, which had the tremendous run, is actually the one that's pulling back. Now, I was looking at these today and asking myself and talking to members and saying, you know, this kind of looks like rotation, right? So you're getting IBB pull back. You're getting the weaker ones like the SOX still pushing up. And you're getting some that were even weaker like the XLB, you know, getting a little bounce here again today. And yeah, the volume trails look horrible on that one, but it was a bounce. And the XLE actually putting in a pretty good scenario here to try to move higher. So, you know, when I look at these indexes, they almost look to me like they're rotating versus coming in. In other words, if they can rotate underneath the indexes, if the sectors can rotate underneath the indexes without giving anything up, then these indexes can go higher still. And if you look at the, you know, some of these like the XLF, still pushing highs. XLI, still pushing highs. And those safety sectors, they're blowing away the tops, right? Here's the XLP, the XLU, just tremendous moves in these stocks. They love those dividends, folks. This is, you know, this is where it's at right now. And they keep pushing to those stocks that have dividends. Maybe it's because it's a safer play in their mind. Maybe it's because they just want, you know, the income stream off the dividends. Whatever it is, they're definitely pushing those stocks. If I look at the world markets, I don't see anything there that's any different. Everything's pretty much in place, waiting for Draghi. Your high risk markets like the FM, you know, the frontier market we talked about, is breaking down. It broke down today. It's a suspect breakdown, but it breaks down. So you got a breakdown taking place here. If you look over at the what is that other one? Oh, Japan, the other one. Japan, right? The Japanese market, of course, is still going silly to the upside. Nothing wrong there, right? That's what happens if you devalue your currency fast enough and furious enough. But if you look at the rest of Asia and European or emerging markets, they're still struggling. They can't move. So you got Japan moving, others being hurt, not moving. You got frontier markets risk off. You see the safety sectors in the U.S. attracting a lot of the money. Yeah, they got to be in equities. Do they want to be risky in equities? Doesn't look like it. Looks like they want to try to be safe, and that simply says to me they're probably going to keep buying America. I mean, that seems to be what's happening here. If Draghi does something dramatic tomorrow, maybe they buy Europe as well. You know, buy the mature markets, if anything, seems to be the story. So high-risk markets struggling, emerging markets struggling, Europe just waiting, and Japan's just loving it. That leaves us with the ox market. So let's pop over there, and really, it's pretty much one word. It's a strong dollar. The strong dollar is really the key here. It's pushing everything around. So if I look at the dollar, here's the dollar spiking up, closing at new highs again. If you look at it on the weekly, it's doing the same thing. If you look at it on the monthly, folks, it's breaking these swing point highs. So it's going after this one now, 23.43. It's not that far away from it. I suspect it's going to test it before it's done. So dollar strength, what does that mean? Well, that means everything that's got a commodity label is getting hammered. And if we go back and look at that continuous commodity index, you can see how it broke down. Here's one going back to 2010 when this one was created. It's going after the lows, the 2010 lows. Pretty much a done deal here. This thing wants to go lower, it looks like still. If I look over at the gold and silver, gold was trashed again. Remember, gold broke this swing point low. That gave it an accelerated move down. Pauses for 2 days, another accelerated move down. Volume comes out of it both times. If you look at it on the weekly, it's very ugly, right? A break of that weekly. And you look at it on the monthly, breaks the swing point low on the monthly. So you've broken on multiple time frames. Folks, this thing's going back to, it looks like 1,000 probably. So if you're trying to play the gold market, maybe not the best idea right now. If you look at silver, and silver's been the leader on these two metals, silver crushed again today. You can see how terrible this looks. Huge ABCD down, 2064. That low, and this is on the weekly. That low 16, so it's roughly, 460. Didn't get hardly any bounce. So 460 off of that takes you down to what, 1240? That's still a long way down. If you bring the long-term chart up on the silver, you can see this thing going down to 1213. So huge, huge moves to the downside. And matter of fact, we can get an ABCD here, 34. That's 17, so it roughly gives you 17 off of that. Oh my God, that's $7. That's another 50% plus to the downside if it plays out that way on the ABCD structure on the long-term time frame. So, of course, it's not going to go down there straight away, right? We're talking about monthly charts here, but the direction is down. It's not up. All right, I want to take a little bit of time and actually talk about How about Whole Foods? Today I did a little a piece this morning. I don't know if you watch these videos, but there was a video out this morning. I'd done a video sometime back on Whole Foods talking about, it was a decent looking bottom fishing candidate, and actually owned it in the portfolio, the TA Today portfolio. But when everything started falling apart in September, it was our only trade that we left on, and eventually we got stopped out of what we had left. Had earnings today, and actually there's a question about it, so that's one of the reasons I'm focusing on it. But it had earnings today, and I just wanted to show you, bottom fishing is not an easy thing to do. And matter of fact, it's very hard to do, but it can be done. And even in my system, it's not as if I ignore bottom fishing trades, but I typically trade or attempt to trade with the trend, not against it. So, there's some certain characteristics you need to happen to make you want to trade something like Whole Foods. So let me bring it up here. There we go. So this is the daily. I want to bring up the weekly and show the weekly. Matter of fact, let's start with the monthly. So a trade like this really is dependent on a number of things. One is you have to have a fairly extended move already. This thing made a top at 65.5. It's trading 50% lower, right? So this thing got cut. Well, it's about 40 something. It got cut in half almost. So that's the first thing, right? You got to get a good haircut to even want to try to trade something like this. So that's the first question, or first thing. The next thing is you really want to see the stock show you that institutional buyers are willing to buy it finally, once it gets creamed. So it gets slammed here on the last earnings, huge volume, right? And when you're doing something like this stock, you're trading it. You're not investing in it yet, right? I mean, yeah, it could turn into an investment, but right now it's a trade. And that trade is targeting the top of the breakdown bar. You have lows just up underneath it. So this area right here is really where you're trying to trade it back to eventually. That's the ideal, right? So you kind of want to get it back up into here. So anywhere from about 48 up to about 50 and a half or so. So that's the trade. So you can see the upside is, fairly large. But it takes a long time for that thing to play out. I mean, I talked about this, I don't know when it was, but it was probably 3-4 weeks ago. But I have been watching it now for, ever since earnings. This last earnings debacle over here, I've been watching it. So the typical thing is you get a spike down and a huge decline, and you get some sort of quick bounce. But then whoever bought that is going to get flushed out, and that's what happens. It comes back down, and then it flushes out. It comes back around, sets some highs. Eventually, it does two important things. First, it tests the low, the big volume, high volume low. And I'm on a weekly chart here, so you had a test here, right? It doesn't break, doesn't have as much volume, and you spike up off of that. That was that first spike, and that was probably short covering spike. Then it comes back down, and 3 weeks in a row, it tests underneath this, It does stay under it 1 week, but it can't break down. And what happens? You get volume coming into it again. Now that could be some short covering, but that's probably some institutional buying as well. Goes back up, rolls back around, and then what does it do? It tests again. Test, 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 right? Still no volume, right? There's no sellers down here. Now it inches back up into earnings. Just like we were talking about on the indexes, right? They're sitting up there at the highs wanting to break. Well, the same sort of thing here. Hang on just a second. So the point here is, you've got this swing point high. It's nestled up underneath there. It's nestled up underneath this one. And then you got earnings coming out tonight. So a lot of times these things will build up. They'll get right up there to where they're going to try to, break out. And then you'll get the news, right? Just like we're talking about with Draghi tomorrow. You're hanging at the highs on the indexes. You're going to get the news tomorrow. If they can run with it, they will, and that's exactly what they're going to try to do here. They're going to go after this swing point high. And a matter of fact, the specific question was, please look at it on a weekly, which I happen to be doing. It looks good after hours. He's saying if it holds here, it's a break on the swing point on multiple time frames. And yes, that's true. It will be. And so, yeah, the key price point, of course, is the swing point highs over here. So if I take a look at these, that top 42.90, it was trading about 43.20 after hours when it closed. So the key tomorrow is going to be holding this swing point high. If you can do that, right, then this thing can work its way back up to the top of this bar. And that, of course, was the trade and the attempted trade. I usually don't trade in front of earnings. I happen to own this one, and I know a couple members were looking at it today because I was talking about it. So, fortunately, this one looks like it probably will work out, but it's hard to trade earnings, and it's definitely hard to trade bottom fishing. But sometimes, you get a decent setup, you get the right kind of characteristics, you can get a decent move on it. And I just wanted to kind of, take the time to show that, especially since I had a question about it, as to how those setups can happen. But remember, folks, it's a trade, right? What does it do if it breaks these swing points? Well, it's going to get a decent move probably, but where to? It's just back up here. It doesn't change the long-term picture. The longer-term picture here is down. It's not up, right? The direction here is this way. On this time frame, on a monthly, if anything, on a monthly you got a sideways. But on the daily, certainly on the weekly, you've got it this way. Daily will flip around with this breakout. And, on the weekly, you'll probably go sideways and you'll be, up on the daily. But again, I used to marvel at the ability of Helene Meisler, which I used to write with at realmoney.com. And she had a great saying sometimes where, a stock was really just a beaten down stock. Or it was a stock that was eventually going to go bankrupt or something. And she used to say something to the effect of, it will double in price 6 times on the way to zero. And if you think about what that means, is that, stocks don't go straight down. Just look at this one, for example. You're down, I don't know what this is, 10% or whatever it is. Okay, now you back up. $5 and 5%. Now you're down 10% again and you're back up, and actually the percentages on the way up are higher, so it's almost like you double on the way back up, right? And then you get the big move down, and now you're going to get the bounce back up. As stocks work their way down, they go up and down. They don't go just straight one way, and that's true on the upside, right? You get the downs and the ups, the downs and the ups. That's a healthy market. This is a healthy bad stock, right? In that it takes its time to go to zero. Now, of course, Whole Foods isn't going to zero, I don't think. Matter of fact, they've got a lot of good characteristics about them, which is one of the reasons you would want to look at this stock. I wouldn't be looking at a stock for a turnaround or a bottom fishing unless it was a big healthy company, because I don't want to be stuck in a stock that's going to zero. But anyway, the point is that it is a trade. It certainly has to be viewed as a trade to start with. Yeah, I can develop into something else, but that's not the way you have to look at it to begin with. Folks, thanks for joining me. It is Wednesday, so one more show tomorrow. It's going to be a big day with Draghi. My view here is this market's probably, it's going to hinge on whatever Draghi does or doesn't say, and it can go up or down on that. We're up a lot, consolidating for 4 bars now. That tells me that, given this type of a sticky, fast move higher, it's going to be hard to push this thing down. And if Draghi does disappoint in a larger way, right, which it's hard to imagine, then, you could get a fast, furious move back the other way. But I doubt that. I suspect this market's going to hold. You got all the easing in Japan. All Draghi has to do is talk about the tools in his tool chest to probably keep this market up and trying to go higher. Again, thanks for joining me. Take care of yourself. I'll see you next time. Tell a friend, tell two. I'm LA. This is and it was your daily NeoTA wrap. Have a great one. I'll see you next time. Good night.